What do you think, team? Should we get rocking and rolling?
Yeah, I think that sounds good. More people, I think, will trickle in.
Cool. Let's do it. Well, as the wonderfully talented Eric Kane mentioned, my name is Christopher Kennedy. Everybody calls me CK. I'm Director of Business Development with Loanpal, and I'm happy to be here with you today to talk with you a little bit about a couple of things. The first one is I'm going to talk with you a little bit about just the problem that we face as a collective, as a collective population. Talk with you a little bit about what we're doing to address that problem. Walk you through some of our financing solutions that we have available, and then talk with you a little bit about the partnership specifically in between Loanpal and Soligent and how it really can help your business. So that's the goal that we're going to run through today. Appreciate you being on the call with me. Let's go ahead and talk about some stuff that affects everybody. So the United States is the biggest carbon emitter in history. Now there's other countries and areas that are quickly catching up. But if you think about it, just from a perspective of, what our responsibility is as a population, we have an obligation to start reducing the amount of carbon that we emit into the environment. And the reason that we have that responsibility is we have the capability. So we have the ability to make a change. It's just a matter of actually making the shift. Now, being in this industry, already, renewables is one of the best ways that we can do that. Whether it's through solar and wind and storage and electric vehicles, there's things that we can do in our day-to-day lives that help to make dramatic shifts and changes in the amount of pollutants we're putting into the air. Now, you probably know where my loyalties lie. I would say that because we have to power our homes anyway, and we have a method to power them through renewable energy, it's almost like it's the clearest choice that you can make with money you would have to spend anyway, transitioning that over from utility power that is sort of a wobbly source of generation to renewable energy through solar equipment. And then when we talk about, who has the responsibility to do that, well, again, responsibility and capability. We know it's important, I think, and we understand the importance affects everybody, not just us, but we also understand that it impacts the world that we're living in to such a high degree that we need to make this change quickly. So we're super passionate about it. I'm super passionate about it. I want to say thank you for contributing towards renewables in a way that is meaningful and impactful every day with what you do. So thank you. My thanks to you. Let's talk about a little bit about Loanpal and what our mission is. So Loanpal, if you're not familiar with us, let's give you a quick Loanpal history. So we're a world positive lender founded in 2003. We're the fastest growing solar lender in the nation, full service consumer finance and mortgage banking platform with about $29 billion in cumulative funded loan volume and over 150,000 customers. Last year, we facilitated about 280 megawatts of residential solar installations. We're operating in all 50 states. And the team here at Loanpal is comprised of professionals who have all been in the solar industry. So folks who started in the solar industry and were dissatisfied with the different financing options we had for ownership. So we decided to come and start a company, and that company's goal was literally to reduce the friction that we experienced when we were in the home. That's what we started doing. We wanted to make less friction in the sales process for the customer, for the sales representative, and we wanted to make sure installers got paid quickly. So that was the initial purpose of creating this Loanpal platform. When I say the initial purpose of creating the Loanpal platform was focused in on those three items, the reason that focus really took hold of the market is because there was an obvious gap. So Loanpal didn't just stumble into the #1 position. We recognized a gap in the industry, and because we recognized that gap in the industry, we were able to run ahead of the competition and able to offer financing solutions that are not only unique, but they're also super competitive. So when you think about this, you're like, okay, well, solar financing, is Chris just going to sit here and talk to me this entire time about solar financing? No, I'm not. But I want to explain a little bit about why solar financing is so important. See, the problem in the past used to be that in order to get access to clean, renewable energy, you had to cut a check. You had to physically write a check for tens of thousands of dollars in order to do that. What the TPO market did, so lease and PPA, is they opened up the opportunities for homeowners to be able to upgrade and convert their homes from utility power to renewable energy without any money out of pocket. Now, if you're familiar with solar and you understand how the financing platforms work, you know that the customer didn't actually get the benefit from some of the most compelling reasons why people upgrade their homes to solar power. So they didn't get it to benefit from things like the investment tax credit. They didn't get to benefit from things like incentives and rebates that were offered from the utility company, because the solar installer or the investor actually took those for themselves because they were the owners of the system. What Loanpal did is said, okay, great, we want to extend that same offering and availability for people who want to own the system. We want to be able to do it with no money out of pocket. We want to be able to do it with a monthly payment that replaces the utility bill that they otherwise would have to pay anyway. And we want to do it in a way that nobody else is doing, that nobody else is doing it in the market today. And so that was really the impetus of why we said, what do? Well, we lend money to people so they can go solar. Right? It's that simple. We lend money to people so that they can own their own source of power, and they don't have to write that check, or they don't have to be put in a position where somebody else has to own equipment on their home. And these reasons are reasons why we've seen this business grow year over year, and we've seen customers and companies that do business with Loanpal grow substantially more than the growth just in the market in general. So let's talk a little bit about some things that are maybe barriers, right? Some things that you may think about and say, these are objections that I get. These are objections that we run into. Let's just talk about a couple of them. In the chat window, if you could, just so we can get a little bit of engagement here. In the chat window, have you ever heard that solar makes it harder to sell your home? Anybody ever heard that before? Okay. All right. Well, you get, and if nobody's heard it before, that's cool. It's an objection that you would occasionally get, and it really is an objection as a result of that TPO market that we're talking about before. I want you to think about this just in terms of an analogy. Imagine that you're a new home buyer and you're going to purchase your dream home. Now, that dream home has solar on it. That solar is owned by somebody else. So you're going to buy your dream home, but you're going to have to lease the equipment and the engine that powers that home. And an analogy would be like, you finally got enough money to buy your dream car, and you had to lease the engine for it, right? So that would be the analogy. So certain customers just didn't like that. They wanted to be able to own the system. They didn't want to have anything that was encumbering the home. They wanted to be able to have, renewable power that they owned, not that somebody else owned. And that's part of the reason why we saw some of those objections, that solar makes it harder to sell your home. A lien on the home. I don't know if this is like some solar financiers that were out there prior to Loanpal actually put a lien on the home, or they'd charge you money based on a tax assessment of the property. That type of financing is complex. It's a little different than almost any other loan that a customer's had. And the lien on the home concept really means that if you stop paying your taxes or you stop paying your solar payment, there's potential that somebody could take your home away from you. That's not the case with Loanpal, and that's not the case with us at all. So if that is a barrier, if you hear that, I want you to be able to say, hey, there's a couple of different things you may hear, like harder to sell your home or a lien on the home or things like that. Those are really a result of two different types of financing options, not what we're talking about today. The other thing that you've got to consider here is you're investing, when you pay your utility bill. The way you pay your utility bill today, you're investing in an asset that somebody else owns, another company owns. You're investing in the utility company's infrastructure. You're investing in the utility company's substations, transformers, lines, trucks, buildings. That's what those payments are going to cover. So every time you make a utility payment, that's what they're going to cover. If you own your own source of power, you're actually investing in an asset that's on your home that you own that will eventually be paid for. So it's power that you are going to need to get from the utility company anyway, that'll eventually be completely and totally paid for when the loan is paid off, and continue to generate renewable energy right on your rooftop. What this is an asset that generates value for the home instead of a liability that takes value away from it. And that's the conversion of upgrading a home from utility power to solar power with an ownership option from Loanpal. Now, other things are like, hey, I heard that it's really hard to qualify for a solar loan. It used to be. Pre-Loanpal, it was pretty darn difficult to qualify for a solar loan. It was harder to qualify for a solar loan than it was to buy a home. And the reason for that is a home is collateral, right? When you purchase your home, the home is backing up the loan as collateral. When you have a solar loan, it's really an unsecured loan. There's not collateral, if you will, that can back that loan up. So it was harder to qualify, but what we've done is we've reduced that friction and reduced some of those barriers so that a solar system and owning your own source of power is no more complicated. In fact, it's easier and substantially easier than the whole process of buying a home, right? As it should be. And then another common objection that you may get is, hey, I'm going to wait for the new stuff, right? You ever get that? I'm going to wait for the new stuff coming. What about the new technology that comes out? I heard about cold fusion. Like I've heard about, I think I've heard just about every objection in regards to new technology that you could possibly hear. And you probably have as well. So when you're thinking about new technology, I want you to actually just frame it in your mind for a second of this technology today replaces a bill that you have today. The technology that's available today replaces a unit of power that you would otherwise have to buy from the utility company and the utility grid. That's 100-year-old technology of sticks and wires. The utility company has a massive problem. The grid that they have constantly has to be maintained, repaired, and expanded. The only way that they can raise additional revenue to continue to repair, expand, and maintain that grid is by increasing cost to their ratepayers, by increasing the cost of their power to their customers. That's the only way that they can do it. That's the model you're on today. That's the old way. The new way is to own your own source of power and invest in technology that, while it's not new, is definitely substantially better than the way that you're powering your home today. So for new technology, just think about it. This isn't a computer. This isn't a cell phone. This isn't going to become antiquated 10 years from now. This is power that we had to buy 100 years ago, and power that we had to buy yesterday, and power that we will continue to have to buy for the foreseeable future. Right. So that's one of the barriers that we would hear very commonly, and one of the ways that lending and financing your solar system would help you to reduce those barriers. And then the most common one, what if I move? The average American homeowner moves every 5 to 7 years. So they're probably going to move. You're probably going to have this one come up. So we wanted to be able to address that with you and say this. The Loanpal solar loan is fully assumable and transferable. So because our guidelines match and mirror the guidelines for Fannie Mae and Freddie Mac mortgage lending guidelines, if you're able to qualify to purchase a home through a mortgage, you're going to be able to qualify to take over the loan payment from the previous owner of the home. So just like transferring the power bill you would call the power company and essentially fill out a little bit of paperwork and give them your social security number and that stuff, and they transfer the power bill over to you from the previous owner. Our process works very similarly. There's just a couple pages of documents that the customer actually signs that releases the old owner of the system and grants the ownership over to the new owner of the home and the solar system. Now, majority of folks are just going to pay the system off when they do move, but it's not an objection any longer because it's fully assumable and transferable. And Loanpal has the only loan in the market that where that's the case. So what do we offer? Well, pretty much anything, right? Like anything you can think of that would help a customer who is super focused on cost per watt, and anything that you can think of that would help a customer who is super focused on the lowest overall monthly payment. So residential solar systems are primarily what we finance, but we also have solar systems with battery or generators added. We have just battery products that are available. Oops, sorry. We have just battery retrofit products that are available. And then fairly soon, we're going to have home improvement and renovation that's available to help expand some home energy efficiency. If that's an area that you focus in on for your business, we'll be able to assist you with that as well coming in the fall. So regardless of what customer you're running into, if you're running into a customer that's, hey, I want to get the lowest overall cost per watt. Let's say that customer that's been shopping and they've been on Energy Sage and that's all they've been looking at is how low can I get my cost per watt? Or you have that customer that really is focused on, well, how low can I get my monthly payment? And any customer in between, we're going to be able to offer a satisfactory solution for that homeowner. All right, APR. So this is just a little bit of APR 101. For those of you that know how this works already, feel free to tune out for about 15 seconds. And for those of you who don't feel poorly about it. Let's just go through a little bit of an education process. So fees. The fees or dealer fees plus interest paid over the life of the loan plus the loan amount over the total number of days in the loan term times, that's where the times 365 times 100 equals the APR. The APR is the average annual percentage rate that describes how much interest the borrower is being charged. So customers have probably seen this already on their mortgages. They've seen it already on their credit cards and car payments. It's not something to be scared of. It's actually super simple. And you don't have to go into any other details. Just say the APR is, and most customers are going to understand it. Loanpal, we provide you some details on what that actually means in the form of a payment on the first page of our loan documents.
How would we track that?
One of the most lucrative tax credits in the history of the IRS is available to homeowners today who upgrade their homes to solar power. So the federal tax credit is a reduction of the amount of taxes that a borrower owes. Let me just give this disclosure. I'm not a tax advisor. Make sure that you never guarantee anything that you aren't doing yourself. So if you're not doing your homeowner's taxes yourself, don't guarantee them that they're going to receive anything. And then make sure that you're also disclosing to your customers that it's important that they talk to a financial advisor or a tax professional about whether or not they're going to qualify to capture all of the tax credit and that they may be eligible to receive through purchasing a solar system. Now, with that disclosure, let's just go into a little bit of detail about what the ITC actually is so that you're super clear on it. So the ITC itself is a reduction in tax liability. It's a dollar for dollar reduction in tax liability. So let's just set it this way. If I make $100,000 a year and I'm in the 10% federal income tax bracket, my federal income tax liability is $10,000. Everybody on the same page with me right now? I make $100,000 a year. My tax bracket is 10%. That means my federal income tax liability is 10% of 100,000 or $10,000. That tax liability for most of us comes out through our paychecks. So every time we get a paycheck, a little bit of money is withheld through payroll taxes. That money is withheld and ultimately set aside in an account at the, anyway, you guys know how that works, right? Set aside in an account. It's at the U.S. Department of Treasury, and then we fill out our taxes to figure out if we guessed right and we had the right amount withheld from our paycheck. If we didn't have the right amount withheld, we can either get a refund back because we overpaid, or we may have to send the IRS a check because we underpaid. So the other option is you don't pay federal income taxes from your payroll checks, but you're a 1099 or self-employed person, and those folks have to actually cut quarterly checks to the IRS. They actually physically have to go through the pain of writing a check and sending it to the IRS, and they do it every quarter. And every single quarter, I promise you, they dread it, right? Because it's painful. When it just comes out of your check, we really don't feel it. Like it just, okay, I got what happened, what was in my direct deposit this month, right? When you actually have to physically stroke the check, it's a little bit more meaningful. So regardless of whether you physically stroke the check or you have that money withheld from your taxes, the ITC will still do the same thing. It's a dollar for dollar reduction in the tax liability that you otherwise would have to pay. So if you've already paid it through payroll tax withholdings, you'd be eligible to receive up to the amount that you've already paid and had withheld back in the form of a refund. If you haven't already paid it, the way that the tax credit would work is it's going to protect you from having to pay those federal income taxes in the future. Let's just use a simple example here that you see on the screen in front of you. A typical homeowner that goes solar pays about 30 grand for a solar installation. 26% of that $30,000 is 7,800 bucks. In this situation, if our homeowner had a tax liability of $100,000 or $10,000, and they had $10,000 withheld from their paychecks, they would reduce that by $7,800 if they had upgraded their home to solar power. In other words, they'd be eligible to receive a refund for $7,800. In the same situation, if they hadn't sent any money to the federal government yet, they're just going to prevent themselves from sending that check. So this isn't a rebate. No government entity sends you money unless you've already overpaid them. And it protects you from having to pay additional taxes if you normally would be in a situation where you're sending quarterly checks to the IRS. Hopefully that makes sense to everybody. If it doesn't, leave some comments in the chat window and we'll make sure that you are super clear on it at the end of this in the Q&A session. Because the loan is unique in that you are eligible to receive a tax credit, there's a unique option that we have for reamortization. The unique option that you have for reamortization is that during the first 18 months of the Loanpal loan, what we're going to do is we're automatically going to assume that the borrower will choose to pay that 26%, so the full 26% amount back to Loanpal within the first 18 months. If they do that, then their monthly payment is going to stay exactly the same. Monthly payments stay the same if they reinvest the tax credit into the solar loan. Okay, it stays exactly the same. If they don't, let's say they keep it. Let's say the $7,800 goes towards something else, like, I don't know, pay down a credit card bill, or remodel the bathroom, or take a vacation that they haven't been able to take for a while. Or, I don't know, it just goes in the savings account, whatever. So I would say this, like, a majority of homeowners are going to choose to do something different with those funds. So make sure that your homeowner understands what the month 19 payment will be if they do not reinvest any money into the solar loan at all. And make sure you explain that to them first. The structure of explaining that to them first, we'll get into in a separate training that's going to come down the road. But the thought process here is you want them to get comfortable with what their payment would be at its highest point before you talk to them about what it could be if they reinvested money in the loan. So no matter what, for the first 18 months, the monthly payment is going to be the same. No matter what, from month 19 all the way through the end of the term, the monthly payment is going to stay the same. So if the customer reinvests that money within the first 18 months, they get to keep this payment just as it was. If they don't, it's either going to go up, or if they reinvest more than the 26%, then their monthly payment's going to go down. The point being, it only happens one time. Just wanted to make sure that everybody was clear on that structure. It's kind of a weird structure for lending, but it's a super common way to structure solar lending. So with this also comes a 60-day grace period. So from the time that you as the installer and from the time that Soligent receives their funds, the homeowner themselves is going to have 60 days to get their payments started. So their payments aren't going to start for 60 days in 60 days from the time that the loan has actually been funded. And funded and install date are relatively similar. Usually within about a day or 2 days. So let's just expand on how that direct pay program works. So we lend to the homeowner. Okay, so the homeowner takes out a loan. Okay, we finance that system. I don't know about the arrows here. I'm going to go this way. I'm going to go this way with the arrows. Okay, so the borrower says, okay, cool. I need a loan for my solar system. Now they met us through you, right? They met us through you as the installer. So the borrower says, okay, Loanpal, I need a loan. Loanpal says, cool, here's your loan. We pay Soligent and we pay you at the same time as soon as the installation is complete. So what this does is this gives you, as the installer, access to have your credit lines opened up, because it's no longer just the Soligent being dependent upon you to make the payment. They've got us to make the payment for you as well. And it also gives you special access to Loanpal's financing platform that you might not otherwise have access to. So if we look at the enrollment requirements, I don't want to go into a whole bunch of details here, but what I will say is if you haven't talked to Alex at Soligent and you're interested in joining the Loanpal Soligent family, talk to Alex. He's on the call right now. Make sure that he has your information so that he can get you everything that you need, and we could work with you to help you get on to the Loanpal program. Let's talk about why, right? Why you would want to be on the Loanpal program. So you're like, hey, I saw a question in the chat window, and Sharon, I wasn't trying to ignore it. I'm just going to answer it afterwards. So thank you for being patient with me. Loanpal has the most generous underwriting guidelines in the industry. The reason that the underwriting guidelines are so generous is it's what we really have structured to allow the highest number of people who are interested in what you have to offer. This allows them to qualify for it. So there's nuances within our underwriting guidelines that make sure that the highest number, the highest percentage of people overall that you're talking to that are homeowners are going to qualify for a Loanpal loan. Nothing more frustrating than spending 45 minutes talking with a customer, trying to get them approved for financing, and then coming back and finding out that they don't qualify because your financer has some sort of goofy requirement, like, I don't know, a goofy requirement like they have to make at least $51,000 a year in order to qualify for the loan, even though they pay every single bill that they have on time. And this is replacing a bill that they otherwise would have. Anyway, so that underwriting guidelines, there's a little bit of secret sauce in there. I'll give you a peek behind the curtains of a little bit of the secret sauce, but we won't give everything away. We got to keep some mystery in the relationship. So higher approval rates lead to higher conversions. What does that mean? That means more people that you talk to who are interested in what you have to offer are going to qualify for it. How many more? Somewhere between 15 and 30%, depending on what financiers you're using. We wanted to make the credit requirements super simple as well. So there's no goofy approval amounts with us. We're never going to send you an approval for $25,630, right? The approval amount is going to be based on FICO, and it's going to be one of two amounts that your borrowers are going to qualify for. They're either going to qualify for $50,000, and if they do qualify for $50,000, that means that the borrower's high credit score. So we pull all three credit bureaus up front. Because we pull all three of those credit bureaus up front, we pay a little bit of extra money to do that, but we grab whichever credit score is the highest from any one of the three. We grab that one, we use that one to qualify your borrower, and then we toss the other two out, or at least we don't consider them in the equation. If in that equation, the high credit score is in between 650 and 699, you're going to see an approval amount of $50,000. So what that allows you to do as a sales professional is to go into a home and say, as long as I design this system at less than 50 grand, if they qualify, I'm not going to have a conversation that sounds like it was a bait and switch, where I don't know if anybody's ever had this conversation or experienced this. I know I have many times, where you're talking to a customer about the Goldilocks system for them. It's the system that replaces the perfect amount of power, the exact amount of power that they used last year from the utility company and would have to buy this year anyway. And then when you go to qualify them for financing, that $30,000 system that you just spent the last 45 minutes convincing them was going to be the best thing that had ever happened to them in terms of energy for their home, the customer qualifies for 25. And you've been talking no money out of pocket. It's super simple, just replace a bill. And now all of a sudden you're coming palms up to them for $5,000 in order to get them that same system. Or you have to have the conversation with your homeowner of, well, some solar is better than no solar. What we can do is just adjust the system size a little bit, and we can get you most of your power from solar, just not all of it that we talked about. It sets you up for disappointment. As long as you design a system at $50,000 or less, you won't ever run into those disappointing situations with Loanpal. And if your borrower's credit score is 700 or above, you're going to look at this and you're going to see it come across as a $100,000 flat approval. That's the maximum allowable finance amount through Loanpal. We don't go beyond $100,000. We're fixed and stuck at $100,000, but it's a super simple, seamless process for you with only two different approval amounts, completely and totally based upon FICO score, not based off of any other random matrix or algorithm. Cool. Also, co-borrowers. First of all, co-borrowers are easy with Loanpal. And co-borrowers should be easy with anybody. The whole point of having a co-borrower is if you don't have enough credit history, or if your credit history is challenged, you're bringing somebody else into the equation who essentially is going to vouch for you on the loan. Now, other solar financiers and other companies in general may make it difficult at this point in the conversation. You may have been talking to a couple the entire time, and as you're having this conversation with a couple, all of a sudden, when it comes time to apply for financing, you're like, okay, who makes more income? Okay, who has better credit? Right? That's a weird thing to start asking to people that you've been talking about and engaged with the entire time as a couple. They've been joint in this decision. We want those customers to be able to be joint on the application. So we allow them to be joint on the application. The application process is a simple URL link. There's no logins required. There's no passwords to remember. It's unique to your company. So the URL that we create is actually unique for your company. And that URL that's unique for your company goes directly into your pipeline, into the Loanpal portal. Super simple, seamless, and easy. And I know I was just mentioning that if you're talking to a couple, you want them both on the financing application, but you don't need to occupy the home. You don't need to be a couple. You don't need to be on title of the home. You don't need to be you don't need to be related. The bottom line here is, as long as you are willing to sign for the paperwork, you're good to go. That's it. That's the qualification. It could be your college roommate from 20 years ago. It could be Nana who lives in Arkansas. It could be anybody. Your co-borrower can be anybody. For more information on co-borrowers, reach out to Alex as well, and he can give you some additional details on how that can help you grow your business. Again, property eligibility. We're in the residential solar lending business. So there's going to be some folks that are asked, hey, what about commercial? Because that's an underserved market as well. That's not a market that we're in today. We're selling loans for owner-occupied residences only. So if it's investment property, it won't work. We're doing grid-tied systems that have to get PTO or some type of interconnection. We can do, a duplex, triplex, or fourplex as long as the person who owns the building lives in one of the units, we can lend on that as well. And then we'll do a townhome or a manufactured home as long as it's on a permanent foundation. And we can do roof or ground mounts, it doesn't matter. If it's a mobile home, so if a true mobile home where it's like either in a park or the customer could literally drive off with the system or drive away from it, those aren't things that we can lend on. Investment properties we don't lend on. You guys are probably all familiar with this. In the event of an economic downturn, investment properties are usually the first things that folks give up or let go back to the bank. And if you don't own the roof, you can't poke holes in it, you can't install solar on it if it's somebody else's property. Based on our best understanding of the market, there's a couple of things that we want to make sure that we protect you, protect our customers, and protect your company's good name on. So the first thing that we have is a cap on what you can charge customers for PV only. And that cap is $5.50 per watt. In California, it's super reasonable. In most areas, it's super reasonable, but that is our cap. It's $5.50 a watt for solar only. Solar plus eligible upgrades. About 30% of homes where a customer wants to upgrade their home to solar power needs some type of upgrade in order to get it done, right? There's some type of upgrade that needs to happen in order to make the home solar ready. And we want you to be able to finance those solar ready additions within the Loanpal loan as well. If you do, the lending guidelines, if you have solar ready additions, the PV only cost is still capped at $5.50 a watt, but we give you a little bit of extra wiggle room, either 35% of the overall loan amount or $7 per watt, whichever is less for solar ready additions. Those could be things like a re-roof, electrical work, main panel upgrade, landscaping like tree trimming, trenching from the main panel to an outbuilding, rafter upgrades and sistering to support the system so it's going to be safely installed on the home, line side taps, any kind of electrical work that you can think of, and additional scope of work items that are required in order to facilitate the solar installation. The key word being required. Okay, if it's required, we'll allow it. If it's a nice to have, you got to check with us and see. So we have some limited home energy efficiency and smart home automation upgrades that you can have. It's a combined cost of either $2,500 or 10% of the loan amount, whichever is more. And that can be for stuff like insulation, LED lighting, Nest Learning thermostats, basically things that you can do to help reduce the amount of power that the home is consuming that lead to some type of return on investment for the homeowner. Those things you're able to wrap and roll into the solar loan overall. The application process couldn't be simpler. It's a short application link that's sent out to the borrower via URL. You don't need a login to send it. Okay, so it's a URL that goes out to the homeowner themselves. It says loan approvals happen within minutes. They happen in 10 seconds or less. So literally within 10 seconds or less, you're going to be able to sign loan paperwork and documents with your customer. Loanpal has our operations team who keep your operations team, sales folks, and the borrower informed each step of the way in the process. Every email that we send to your customer, we also copy your admin, so your operations folks, and we copy the salesperson who actually is on the loan as well. So you're going to be in the loop the entire time. There'll never be an occasion that you run into with like, what did Loanpal send to my customer? You're copied on the email, just open it up and look. We have a dedicated sales and support line. I'm so proud of these folks. It's our underwriting team. We call them sales and support. It's our underwriting team. When you call into Loanpal to 844-910-0111, you get an underwriter who can actually move your job forward and progress the application forward. You don't just get somebody who picks the phone up and says, okay, cool, we'll get back to you in 24 hours. You get somebody who's actually going to be able to help you get it done right there while you're in the home. Now that's key and critical, because when you're in the home and when the buyer is experiencing that like readiness to move forward, we never want to be the reason that you're not able to move forward in the home. So all of our processes are designed to make sure that it's a quick, seamless application where you can get everything done in one sit with the customer. From the borrower's perspective, it's pretty simple. So here's how the borrower sees it. They enter in the information into the loan application. We do not require a full social security number. We only require the last four. We do require some other token information like their name as it appears on title, their property address of where the installation's occurring, those type of things. Like it's all just standard token information. And then there's a couple disclosure boxes that they need to check off. Once they've done that, they're going to receive an instant pop-up on the screen. When I say instant, it's within 10 seconds. So they get that, boom, underwriting decision pops up on the screen. A majority of the time, what it's going to be is an approval when you're running business through Loanpal. When you get that approval, there's a button that you click on that says Get Loan Docs. So that generates the loan documents and sends them to the email that the customer put in on the application in step one directly over to them so they can DocuSign their loan documents immediately. Super simple, seamless borrower experience. All of this can transpire and take place from the time the application to the time they sign their loan documents. It can all take place within 3 to 5 minutes. And that's if you cover the loan documents with them, which I suggest you do every single time. We also wanted to make it super simple for you to calculate payments. So if you talk to a customer and they give you a bunch of what if scenarios, well, what if it was this? What if it was that? We didn't want you to have to go back and run a proposal or have to have some advanced degree in Excel programming to do that. We want to make it simple for you. So there's a calculator that each one of our partners gets that simply displays this. It says, hey, what's the total loan amount? What's the term that the customer wants? Okay, here's what their monthly payment is going to be. And the way that I generally structure it is here's their monthly payment if they kept the tax credit. And then I go down and show them the tax credit. And then this is what the monthly payment's going to be for the first 18 months, or if you want to reinvest the tax credit, okay? But again, process, super simple, super seamless, and created by solar sales professionals for solar sales professionals. I think at this point, what I'm going to do is I'm going to jump off here and I'm going to ask Adrian. Adrian, are you on the line still?
Yeah, I'm here.
Awesome. Did you or Leandra want to cover the direct pay program?
Yeah, I'll hop in for the last several slides. Thanks so much, CK, for going through everything.
Awesome, my pleasure.
That's awesome. And if you can just stay on because you're still in control of the deck, that would be great. So hi, everyone. My name's Adrian Wickham-Gobert. I'm the Director of Marketing at Loanpal when it comes to all of our consumer finance products. So solar, home energy efficiency, and coming down the pipe, home improvement. And so I just wanted to take the last couple of minutes just to really show you guys how easy it is to get paid via this program. The Soligent team has been phenomenal in getting onboarded and up and going. Alex is a great resource for you. You can go to the next slide, CK. And so once you're integrated with our portal, what you'll see is Soligent will be listed as one of the distributors. We've partnered with several distributors, so if you get equipment from different people, we can also hook you up through our platform that way. But I'll say off the record that Soligent is one of our favorites, and it's really simple. Once the loan has funded, we fund the loan at install complete, and once that installation is complete, we will pay Soligent directly for the purchase order amount and then net the difference and send it to you. So as CK described before, this is a really great way of opening up your credit lines and a way for us to get comfortable with bringing on smaller solar installers that typically we wouldn't be able to work with because of our capital providers. So this is a great way to kind of bring everyone to the table and be able to expand your customer base and offering that way. So that's the nuts and bolts of it. And if you decide to move forward, we definitely have more trainings on how to use the portal. We have more resources, and so there's a lot there. You can go to the next slide, CK. Another program that I wanted to just plug really quickly is our Give Power and Give Partners program. So we are affiliated with a nonprofit called Give Power. Give Power brings clean drinking water and installs solar systems, desalination plants, and water purification plants in the developing world, typically in areas of the planet where there's not ready access to these things or even electricity. And so we have a couple different programs that you can get enrolled in. This is great if you have standards for corporate social responsibility. This is a really great way to kind of plug in. We take our installers on trips. And I know CK went to Colombia earlier this year. I went to Nepal last year. So it's really great, the impact here. And basically for every loan, you can opt into this program, but for every Loanpal install that's done, we'll contribute $20 to Give Power, and this goes directly into actually funding those opportunities across the world. So you can go to the next slide. And just to let you know a couple of the programs that we've done so far, Give Power brought solar to Standing Rock. We mentioned Nepal and Colombia, but we also have partnered with the World Wildlife Foundation, bringing solar to rhino and elephant sanctuaries, and then also lots of schools and rural villages. So CK, we can go to the last slide here. You want to tag team this one with me? Oh, you're on mute.
Sounds like fun. Let's do it.
Yeah, so you've got to hear from CK. He has just an incredible wealth of knowledge. Our whole business development team, we've all originally sold solar in the home, me included. And so we really kind of understand this. I think that's like the biggest value add here. CK, what else do you want to say about the team and getting involved and working with us?
Yeah, I mean, it always feels a little funny to talk about, yourself, but I'll talk about my colleagues that I work with. So first of all, if you work with Loanpal, you're going to work with people who genuinely understand what you're trying to get accomplished, and for all intents and purposes, they're going to understand the best way to get that accomplished. They've literally been in your shoes before. My team here has been responsible for the sale and installation of over 10,000 residential solar systems per month for years at a time. So it's a unique position that we're in, where we really understand how the residential solar market works. We understand some of the pain points that you feel, but we're also still humbled to work with you. You're the ones who are continuing to proliferate solar and the massive adoption of solar throughout the communities that you have locally. And so we take feedback as well. Like you need something, you want us to create a program for you? Cool. Earlier on in this year, one of our partners came to us and said, hey, we're starting to see some more folks that want to pay things off really quickly. We'd like to have a no dealer fee option. We created it for them. Hey, we wanted to see interest rates that were as low as 2.99% on some different products. Can you do that? Absolutely. We'll create programs specific to the needs in your market, just based on understanding that we want to make this as easy for you as possible. So I mean, without diving into too much detail, just know we're super receptive to feedback. We're super engaged with what you're doing on a day-to-day and very appreciative of it as well.